What up? We back once again. Stay with me this video. We're going to get into detail lucid versus UAL, unusual whales, options reading. Super exciting stuff, right? We are going to try and analyze the two different types of plays that these are, and hopefully it gives you a nice compare and contrast like you used to do back in English class. Into why one play may be better than another, or why one play might not be ready yet. So stick with me as much as you can. I'm going to try to go super fast. I already did this video and it was super good, but you know what? I messed up because I was moving this stupid mouse around so much that it was just, I was rewatching the video. It was annoying the crap out of me. So I'm redoing the video. I think we can do it better anyway, so let's get it. One thing I wanted to say real quick was open interest. Open interest indicates the total number of option contracts that are currently out there. Okay, so these contracts have been traded but not yet liquidated. And the thing is, open interest is not updated during the trading day. So we're going to be talking about open interest. I just wanted to give this little definition out there. Options trading volume is updated. Open interest is not. So keep that in mind. Okay, so we're going to be looking at my options scanner that I have, and the reason we choose 30,000 for the premium minimum that we want to see, we only want to see 30,000 plus premiums showing up on our flow. And the reason is because that's what unusual whales separates out as the biggest whales. They use 30,000. I don't know why they use 30,000. I'm not going to pretend like I'm smart enough to figure that out. I'm just going with what they already have, and they do a good job of analyzing. I'm moving the mouse a lot again, but they do a good job of analyzing what the 30,000 plus whales are doing. All right. We try not to move the mouse as much. I always move it too much when I'm talking. Okay, so now we're looking at the flow of only the 30,000 pluses. We also only want expiries that are close to where we are today. So right now it's November 5th. It's going to be, we're going to open up November 8th. We're going to open up and we're going to start a new trading week. We want obviously to see what kind of flow is happening on the 12th, which is our next options expiries for weeks, for weeklies. And then we want to see the 19th. We also want to see the 26th. So, and we want to see the 3rd. In my opinion, looking 4 weeks out, if you're using option flow correctly and you're looking basically what traders are buying in the next 4 weeks, that's going to give you a really good leading indicator as to what is going to happen. So if you're watching the flow all day, I'm literally watching this options flow like 8 hours, throughout the day, or however long the trading session is, 7.5 hours, 6.5 hours. I don't even actually know how many hours it is. I just know from 8:30 Central to 3 p.m. I'm watching this flow using this scanner, and I'm getting a really good idea of what the market is trying to do based on these bigger buys, these bigger options plays, and kind of knowing where the market is going to starting to trend. Especially if you do this over multiple days, and now you're really starting to build yourself building yourself a nice foundation of what type of plays you're going to want to see in that flow and what kind of plays you want to take. Okay, so we're going to talk about a couple particular plays, but let me finish this scanner here. We want to see volume greater than open interest. What that means? So they're updating the volume throughout the day. So basically, once that volume exceeds the open interest, which is not updated throughout the day, but once that volume exceeds the open interest, it can show up here on the scanner, and that's what I want. I don't want to see trades that don't have a lot of volume, basically because it's too early. I think that's kind of my read on it. Is if there hasn't been a lot of volume built into that strike yet, or that particular ticker, then I don't want to be really interested in it, because if there's a ton of volume in Nvidia, then why am I trying to play Tesla if Tesla is not getting any volume, right? Volume is the leading indicator. You look at volume on your stock, right? When you're watching the volume drop down, volume's drying up, the stock just doesn't move. Well, that's the same thing with options, and it's even more so with options. Because with options, you force the market maker to get involved, and they have to buy stock. So That's why the options market leads the indices and leads stocks, is because the options are driving those market makers to purchase stock or sell stock based on what the options markets are doing or making them do, so that they can stay delta neutral. That's a whole nother topic for another day. But that's the point of why you watch options flows, because it is going to give you a leading indicator of what is to come. Okay, so we want volume greater than open interest. We want out of the money only, because we don't care about your Tesla 200 deep in the money call for 2023. Okay, I don't care about that. I'm not buying a, what would that be? An $80,000 call or whatever, because my account size is $500, and I'm trying to take $500 to $3,000, in a month. You know what I mean? So that's what this scanner is built for, is for that small account and that momentum type play. So we want out of the money only. I want single leg only. I don't care about your complex calendar, your iron condor, your iron butterfly, or your jade lizard. What the freak is that? I don't care about that. I only want the bearish or bullish bet. I only want it cheap, and I only want it super urgent. So that's the plays I want. I want it based on the theme of the market. I want it to be urgent, and I want it to be, I want it to happen as soon as possible. I don't want to hold on to this contract and just let theta kill me. So avoid theta as much as possible using this. That's the point. And there might be a better setup. You guys might come up with something different. Set this up based on your trading style. If you're looking for leaps, set that expiry out, 2 years. And just watch leaps and just buy the leaps that the big whales are buying, So that's the idea. So, okay, analyzing the two plays, Lucid versus UAL. Okay, so Lucid here. Let's look at Lucid Flow. I was looking at this. Like I said, I've already done this video, so I kind of already know what this flow looks like. And this is why this is helpful doing this. I would say that if you wanted to learn options flow, do this. Go analyze a few tickers every night. Analyze the flow for that day and look at what these whales are doing. And look at the timing. Look at the clusters. There's clusters of plays that show up that don't necessarily show up all as one play, and I'm going to give you an example of that. So let's start off at the beginning of the day, which would have been the first trade of the day was bearish. Okay, so we don't, the 66,000, 30,000, these aren't necessarily buy or sell signals, especially if they're short put or short premium. That's what I mean. If you start seeing short premiums, either calls or puts, I kind of just ignore that, because unless there's just a ton of it. If I start seeing a lot of it like this right here, I start seeing a nice little trend of just being short premium. Just every single time there's an alert that comes through on the scanner, it's just short premium. That's not exactly a bullish sign, because there's no long premium here happening, and I want there to be bullish premium with size to basically cause the imbalance in the market to go higher. Okay, that's what you're looking for. You're looking for that premium bomb. That causes the market makers, causes traders to get into the market and get long. And what happens is you see these huge, premium bombs that come through, and you might see multiple ones, and other traders are following this. So they're doing the same thing I'm doing. They're looking for these big plays, and they go, okay, huge sweep or huge, $400,000 call way out of the money. Like, what is that about? Okay, somebody knows something, right? And that's the whole idea. Someone always knows something. Okay, so that's what we're trying to catch. So we're seeing short premium, I would not be long here, even though it was right to be long. By the end of the day, you would have been right, but here is not the play. You don't have any buy signal here, at least in the options flow. Now here's our first long calls that came through. Decent size. Okay, so this is just like a heads up, like, hey, okay, some people were getting long, then short again. All right, so that's bearish. It's not super bearish. It just means that these aren't going to push the market up if people are just selling calls all day long. They're just trying to collect premium. So if you're long the call, that means that you're long, that you own that premium, and you want that premium to grow. You want that premium to appreciate. If you're short the premium, you want that theta to kick in. You want that premium to depreciate. That's the only way you make money, is if you're short the premium and it goes down. So that's why this is a bearish bet. Bullish bet here. You got a small little play, 51,000. Okay, so they're long. And then you have a sell of a put. Interesting. That's our first sell of the put of the day, right? So at the opposite effect of a short call, now you have a short put. Not exactly bullish as far as you're going to see a huge jump in the price, but it is interesting. So it's going to put a little floor in the market at 37 just because you have a short put there. You have someone that's holding the market there at a short 37. So they're hoping that the put premium loses value, meaning that Lucid either stays flat or goes up. So we got some long call, then you got some short call, long call. We're just going to kind of go quicker here. Then you had a nice little blast there. 4 long calls there. Okay, so that's interesting. Total premium, you're at 60, 90, 150,000 probably in premium here between all these. I don't want to move the mouse around because it drives me crazy when I rewatch this. And then you've got a decent premium. So I like premiums that are cheap like this. So 80 bucks. So at 80 bucks. So this right here, when I start seeing this right here, I go, okay, so someone's buying calls, someone's trying to get long here. I like this play right here for 80 bucks. It's such a cheap way to get into the play. But I don't know if I would necessarily be in it yet. I would have to look at the chart. So say it's around 39 and you start seeing the move up. Okay, I mean, I'm okay with this play here just because you've got to move higher here. I mean, everything just looks lined up there. So that would be a decent starter, starter pack here is to get in with 80 bucks or however many contracts you want. All right, then we had another sell call, just shutting it down. And so it's a lot of mixed action. And then you had some puts coming through. So you do have some bears that exist on Lucid. So another thing you can do is go look at the biggest play of the day, which I've already done, which is this 205,000 40 put. They were long the put, and the open interest and size. You had this one trade exceed the open interest of the day, which that's very interesting because that's just that's just one trade exceeding the open interest. The total volume of the day was 5,400 contracts that were built up over the day, well exceeding open interest. So you have one trade that exceeds open interest and is a large chunk of the total volume, and you have a lot of volume exceeding open interest. So this is a very bearish bet. That's like someone, if you're playing poker with somebody and they go ahead and put 80% of your stake into the pot. Okay, they got pocket aces, right, or whatever. They got pocket kings. They've got the nuts. Essentially, is what you're thinking if they're going all in a play like this. So it's a pretty large bet. I mean, relative to the rest of the premiums coming through, you had a nice size bet. All right, so that's interesting. I'm definitely selling this call I bought earlier for 80 bucks. Where was that at? We had that nice little call earlier at 80 bucks that I'm selling if I see that pop through. As soon as I see that come through, I'm going, okay, I'm out. Okay, it doesn't mean I stay out. It just means I'm out until I see something different. But what happens is price keeps rising. Price keeps going, so they don't care about this. That's another thing. There's a divergence here. You had a bearish bet, but price kept going up. And then you had a nice little carpet bomb here of premium where they broke out the trade over 4 strikes or 4 different types of trades. So instead of dropping one nuke, they dropped a little carpet bomb of 73,000. So you got the 44s, which is a nice close strike. I mean, Lucid can definitely go to 44 and beyond. The premium is a little bit elevated, but that just means that there's a lot of implied volatility, meaning they're expecting large movements. So it's not a bad bet. You got 5 days, and that comes right after the carpet bomb here, and the premium is exceeding, the bull premium is exceeding that bomb, that put. So, and the price is continuing to rise. So this guy's under pressure. Hopefully you're seeing how this whole day played out with these whales. This guy's under pressure now because he has 205,000 in premium, and he owns a lot of contracts, 808. and the price is not coming down. So he might get his money back. He might very well get a lot of his money back next week. Who knows? He still has a lot of time, but that's the idea. Then you had some sells come through. You had a sell of a put, so I would discount. I wouldn't even look at these. I mean, premium wise, what we're tracking now are these big guys. We're tracking this guy here, and we're tracking this guy, and they might be the same person. Who knows? He might have given up on this and just went ahead and bought calls. Who knows? All I know is that the trade at the end of the day, 5 minutes left, was a trade that basically nullified this put. All right, so hopefully that helps you there. That's the lucid trade. Now here's a very different type of trade, UAL. Okay, here's the flow for UAL. This is going back to September 27th. So we actually have the whale scanner filter here going back basically a month and some days, and this is all we have. Okay, so which trade would you rather take right now? Which one do you think is more urgent of a trade to take right now, lucid or UAL? All right, that's the question. And why it's obvious because you know what's interesting. It's obvious that lucid is the play, okay, because it's blatant. But here's a very interesting situation is that the market is rotating into, this is something that just comes with experience and just knowing how the markets work. They're rotating into reopening plays, which UAL is an airline. And you've got today only, November 5th, you had 54 strikes being bought for 11.19, so it's a little farther out. Remember how I said earlier, I don't know if I said it in that last video or not, but looking at if you see the further out strikes being bought, so we're looking at 11.12 being our closest. These strike was bought 2 weeks out. They're starting to build a position. That's my theory. Okay, again, I'm an intermediate trader. I'm not an expert, so don't take this as gospel. This is just hopefully helping the new traders get an idea of how to use unusual whales. They're starting to build a position here because this was a 3 days before a whale. They had one whale here, and then the next whale was like a month ago. So you had a large increase in activity into this 54. $2 out. Okay, $2 out is only a buck. Only a buck for 2 weeks versus lucid being $2.50 for $4 difference. So hopefully this makes sense too. You have the 11.12, $2.50, okay, for only 5 days versus 2 weeks with UAL is $2.70. Okay, so yeah, these premiums are going to be jacked because there's just so much volume and implied volatility in lucid. It's had such a run, and there might be some kind of move happening. There might be some news coming. I know that they opened up a some kind of showroom or ballroom or whatever. I don't know for the lucid dream. But UAL is very interesting to me as well because it's something you add to your watch list and go, okay, if I start seeing more flow into this, because you had a huge amount of contracts purchased here for cheap. Okay, just if you guys want to learn options premium reading, this is cheap because you got 2 weeks for a buck versus lucid 1 week for $2.50. And the strikes are, the difference in the spread here between the strike is virtually the same or less. So I'm definitely keeping this UAL on watch. It's a little bit further out. I would be more urgent into the lucid as of next week, unless I started seeing some more flow coming in that would more urgent on the UAL. So that's definitely, so this hopefully helps you guys out. Let me know in the comments if this makes sense. And if it doesn't make sense, I'll try to do some more videos on it that make sense. But anyways, peace. Have a good weekend. Hope you guys made money this week.